The costs have been coming down for 20 years. We're ready for prime time. These are three exponential growth trends that are converging, and that is why this is so difficult for traditional analysts to value. The base case, it's a 5-year target, so the end of 24, it's $7,000. And we've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be. But our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
Hey, I'm Stephen, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So many of you will know ARK Invest have been very bullish on Tesla for a number of years, and to be honest, most of the time when Cathie Wood or others from ARK appeared in the mainstream finance media sharing their thoughts, their thesis, and most importantly their price target on Tesla stock, they were mocked, ridiculed, or laughed off the stage, so to speak. At the very least, people tended to be extremely skeptical and dubious of their claims. Well, the question is, now who's laughing? Tesla stock has gone on a huge run over the last 12 months. This has come as a huge shock to the vast majority of those in the mainstream finance media and retail investors, but not at all a surprise to those people who previously sounded like they were completely fucking insane regarding their Tesla stock price targets. So in this video, given the fact that people have extremely short memories these days, we're winding the clock back to earlier this year just before the shit hit the fan with the global pandemic and hearing what Cathie Wood from ARK Invest had to say about Tesla and keeping her accountable. Since she's made these claims and said these things, what's changed? Have we gained any further evidence that their thesis is on track, or can we find any counter evidence? And keep in mind that Tesla's stock split earlier this year after this interview was recorded, meaning all the prices, you can divide them by 5. ARK Invest's $7,000 price target is now a $1,400 price target, split adjusted. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
All right, we talked about Tesla bulls, and we're going to meet one in just a moment. In fact, one of the biggest ones on the street. But to preface that, Tesla's wild ride has left many of the analyst community in the dust. Check out where analysts stood just a year ago on this stock. Average price target was roughly $300 a share, just above where shares were trading at the time. Today, the average price target is closer to $500 a share, and that's more than 30% below where the stock closed today after that distinct sell-off. Next guest thinks Tesla has room to run. In fact, she thinks Tesla could hit $15,000 a share within the next 4 years. Let's bring in ARK Invest CEO and founder Cathie Wood. Cathie, welcome. I know $15,000 a share is not your base case.
No.
It's your reach case. What is your base case of where this $700 stock is in 4 years?
Yes, the base case, it's a 5-year target, so the end of 24, it's $7,000. And
so just to be super clear, when this was recorded earlier this year, the average analyst price target on Tesla stock was $100 per share, split adjusted. Today, Tesla stock is approaching $600 per share. ARK Invest's $7,000 price target over 5 is now $1,400 per share, nearly halfway to ARK's insane $7,000 price target. This is important. Wall Street analyst average $100. ARK Invest price target $1,400. Less than a year later, Tesla stock is about halfway there. So the question is, apart from who's laughing now, is how did ARK Invest have such conviction and be able to speak out as the only outlier on Wall Street saying, hey guys, no, you are way off the mark. Your price target is here, we're up here. How did they know? Well, let's see what Cathie had to say.
We've arrived at that price by weighting the probabilities of 10 different scenarios, including bankruptcy, to be honest. So we've tried to be as fair and balanced as we possibly could be, but our confidence level that this stock is heading for $7,000 over the next 5 years is very high.
So you take out your lowest probability scenarios, you take out the ones that you think just aren't going to work, or the highly outlandish ones where everything has to click exactly right. On what bricks is this $7,000 foundation founded? Is it improving margins? Is it lowering the cost of production of the vehicles as they get up to scale, or what?
Yes, there are three sources for the increase in our estimate, our estimated price target. One is, as Tesla killers entered the market last year, we expected Tesla's market share to go down from 17% globally, that includes China, to something lower. Instead, it went up to 18%.
Remarkably, we now know that Tesla has maintained an 18% share of the global EV market through the first 3 quarters of 2020, despite numerous vehicles launching in that time. And keep in mind, a huge portion of this global EV market is the cheap, low-budget, compact, really low-range cars in China. Tesla is still managing to maintain enormous market share with premium-priced vehicles. This is truly incredible.
And the reason it
17% in electric vehicles or in all vehicles?
No, electric vehicles.
Vehicles.
This is global. There are many electric vehicle manufacturers in China. Very low quality, but very. So what we're learning is Tesla is just so far ahead of the pack. And I'm talking about the BMWs, the Mercedes, as far as range and other important metrics when it comes to electric vehicles. Their battery cost is 3 years ahead, 3 to 4 years ahead of any other auto manufacturer in terms of the cost declines.
That awkward moment when this conversation occurred before Tesla's Battery Investor Day, at which they announced a path and a plan to halve their battery costs within a 3-year period. This on the back of Cathie's comments that Tesla were already years ahead in terms of their battery costs. And we heard previously, the market share has been maintained. So far ARK's thesis on Tesla, massive tick, massive tick. In fact, both of these data points skew even more bullish than Cathie and ARK were expecting.
And so every other auto manufacturer will, if they want to be competitive with Tesla, and I'm including BMW and Daimler and all, if they want to be competitive, like for like, they will have to sell their cars at a loss at the same time they're losing their internal combustion engine business. So they have a big problem.
What an understatement from Cathie there. They certainly do have a big problem. Few people seem to truly understand this. At this point in time, Tesla is producing EVs far more profitably than any other company on planet Earth, and they continue to aggressively drive their costs down with new innovations in manufacturing techniques. This really matters. For any company to compete with Tesla, they must first create a product that offers similar value. Then they somehow have to figure out how to drive the cost of that product down so they're not losing tens of thousands of dollars on every sale trying to compete with Tesla on price. This is definitely a rather large problem, as Cathie pointed out. So
they have a big problem. So
are you confident enough in their ability to overcome what I would call sort of manufacturing hairballs that have struck them in the past and caused them to miss or delay production targets?
So nothing is in a straight line, you can't promise, but what they did in Shanghai was unbelievable. Breaking ground and producing within a year.
As 2020 has progressed, we've seen Tesla's incredible speed in both Berlin and Austin. Austin now operating on 24-hour shifts, non-stop construction work on that factory. And Berlin, despite Germany, lots of red tape, blah, 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 still steaming ahead. In fact, I'm going to overlay some footage from both Berlin and Austin just to give you guys some context of how much has happened since these comments from Cathie.
And I think they're taking those learnings elsewhere. In Germany, outside of Berlin, we've been thinking, okay, that's a setup for bureaucracy. They have been welcomed with open arms because Germany doesn't want to lose the auto industry, right? And they don't want to lose the jobs. So, and now we're hearing potentially about Texas.
9 months later, and we know the pace of construction has been absolutely insane in both Berlin and Austin. The Austin factory now doing 24-hour shifts, construction non-stop. Berlin coming close to completion. Here's a prediction. By mid-2021, Q3 at the absolute latest, there'll be vehicles rolling off production lines in limited numbers at both of these factories.
So we think they're going to surprise on the production side now. It took a lot of trial and error, just like with their Falcon rockets. When they were trying to land them, it was failure, 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 then success. And now they've been successful pretty much every time since. So I think they've gotten the manufacturing.
Cathie, when you take
down.
Tyler's question to the next level,
yes.
do you dig in and get granular on the opportunities when you look at the sum of the parts? Is it going to be panels, autonomous drive, or batteries that are the new breakout? Because when we look to Tyler's point, when we look at the cars in production, everyone thinks they're an expert on what they can and can't do with Tesla. But is there going to be shockers going forward where there's going to be a breakout valuation on batteries because their technology is so far advanced?
Yeah, I think they acquired a company called Maxwell Technologies, and they've been very secretive about what that is going to do for their battery technology. So what I just said to you does not even incorporate Maxwell. So yes, we do think there are surprises on the battery front.
Got to give credit where it's due. Kathy there suggesting that there were some surprises to come on the battery front, and sure enough, Battery Invest today and the subsequent plan to drive their costs down by more than half. Well, what do you know? Right again.
They have their own AI chip for autonomous, the only auto manufacturer to have one. And James Wang, who worked at our analyst, who worked at NVIDIA for 8-9 years, took a look at those specs and said 4 years ahead of anything that NVIDIA is going to be able to produce, because it's single purpose, it's not general purpose. So we think they're going to be way ahead of the game on autonomous.
And surprise, surprise, Tesla's autonomous software has grown in leaps and bounds throughout 2020. We've seen the release of full self-driving beta to some early testers now, and progress is moving at an absolutely astonishing rate.
And that's where the real surprises are going to be, because autonomous is a recurring revenue, very high margin, almost software as a service like opportunity, autonomous taxi networks. And what you have baked in the cake from the street primarily are low margin gross margins, more like auto, in the 25-30% range. We actually think gross margins, because of their battery technology, could head for 40% on the EV itself, and then the incremental revenues from autonomous would be in the 80% plus range. And we think that's what people are missing. And in our $7,000 target, so the scenario testing, we assume only a 25% chance that they're going to be up and running with autonomous within 2 to 3 years.
Karen, jump in.
Yeah, so kudos to you. I mean, you had what I thought was an outlandish target 2 years ago, or 1.5 years ago, and here we are. And so you have another one, maybe outlandish, maybe spot on.
So I'm going to mark exactly where on the Tesla stock price chart this interview took place. Does this seem outlandish or spot on? Keeping in mind, this was a 5-year price target. We've got more than 4 years left, and it's almost halfway there now. Since this interview, Tesla stock has literally gone to the moon, and it's now on its way to Mars. And what a perfect opportunity to plug the merch store. Don't forget to pick up your t-shirt, Tesla stock to Mars or Tesla stock to the moon. Links in description. We've sold almost 200 Tesla stock to Mars shirts within 3 weeks, so thanks to everyone for the support.
But let me ask you, when you get to this 7,000, to pick your more moderate case, what's it trading at? As a multiple of earnings, or as a what will that valuation then be?
So in 5 years, again, we don't really operate like that. We're just trying to figure out the cash flows and then discount them. But one of the things that I'd like to focus on is the reason this is going to be such a big upside surprise is because Tesla is riding the convergence of 3 major innovation platforms. Convergence. It's very hard to analyze this in the traditional world, right? Auto analysts are not robotics experts. They are not artificial intelligence experts or battery experts.
Oh, so that's why all of the Wall Street analysts have been dead fucking wrong on Tesla stock and completely missed the mark. Thanks for letting us know, Kathy. I knew there was something up.
We have 3 analysts working on this model together. All of them are characterized by exponential growth during the We are ready for prime time. The seeds for what we're about to witness now, not just with Tesla, but with genomics, with 3D printing, with everything we do. The seeds were sown during the tech and telecom bubble. The costs back then were way too high to play out, for those platforms to play out. The costs have been coming down for 20 years. We're ready for prime time. These are 3 exponential growth trends that are converging, and that is why this is so difficult for traditional analysts to value.
Now, this is a great opportunity to just jump in here and point this out again. I really want to hammer this point home. I've been screaming from the rooftops to everyone who would listen and most who wouldn't for a long time. The opportunity in Tesla was phenomenal and no one got it. This is why I started the channel. I got so frustrated. I'm like, hey guys, can you not see what I can see? Hello? What was not being seen was the disruptive innovation and the convergence of these exponential technologies. Now, it's totally understandable. If you're a Wall Street stock analyst and you only have one lens through which to look at a stock, you're going to miss it. But if you have a broader perspective and understand everything that's going on, right, battery costs are coming down, computer costs are coming down, the data lead, oh, okay, oh, yeah. That's how you spot this opportunity. That's how so many on Wall Street have missed this. So in the future, if you hear any stock analyst talking about Tesla and they're making references saying that their valuation is crazy because they're an automaker and it doesn't make sense, or you hear somebody talking about units of volume or vehicles and that's it, they're not talking about energy, they're not talking about software, they're an idiot. They shouldn't be talking. They're unqualified, and I actually mean that. I really, really, really do not like people sharing their apparently qualified opinions from a place of influence and respect when they actually don't know what the fuck they're talking about. Now, some of you may have noticed I'm not exactly the most subtle or subdued person when sharing opinions that I have high conviction in. The reason that I'm being so obnoxious to these clowns on Wall Street isn't so they cry themselves to sleep. It's so they wake the fuck up and stop being wrong. I'm not the guy to go, psst, psst, I'm so sorry, but I think you might have made a mistake. Sometimes that'll get through to people. Other times you just need to slap them in the face and go, listen mate, you're fucked up, you're completely dead fucking wrong, and here is why. Obviously, horses for courses, I accept that. But I'm actually trying to do a service here to the people on Wall Street who've completely missed the mark on Tesla here. Some are willing to accept this, some aren't. But the facts are the facts. Most of Wall Street's analysts have been completely wrong on Tesla to the point it is absolutely embarrassing.
This is all we do. We do nothing but disruptive innovation because we have never seen as much disruptive innovation evolving at the same time ever. You have to go back to telephone, electricity, internal combustion engine. That's the last time we saw exponential growth on the order that we're going to see.
I want to get in
right.
one quick question from Dan, one quick answer from you.
Just real
one.
quickly, and this is near term. Do you expect volatility around earnings? There was in the last couple of years, but like for instance, they sold cars at a 450,000 annualized rate last quarter, right? Mm-hmm. And when you look at their net income, it all came from selling tax credits. Do you expect that to be a big component of it? And does it look like that at other places around the world where you're expecting really a lot of growth to come?
Quick answer,
subsidies?
please.
Yes.
They're going to get a lot of credits from companies like Fiat Chrysler, who's paying them $500 to offset. So we think that, but that's not in our models. We never include subsidies in our models. What we're talking about right now is Tesla is ready for prime time as an EV and AV manufacturer.
All right, you got to leave it there. Cathie, thank you very much. You've done your homework on this one.
Thank
Really
you.
appreciate it.
Thank
Thank
you
you.
Credibility matters. That's why I'm revisiting some of these clips. If somebody's consistently wrong, we can safely ignore their opinion in the future. And the reverse is also true. If somebody's consistently right, especially when at the time they sound completely insane, aka ARK Invest insane crazy price target on Tesla stock, next minute Tesla stock goes to the moon, they gain a little bit of credibility. And it's worth paying that little bit more attention to their other thoughts and opinions about other events that may or may not occur in the future too. That's what credibility is based on. And now, in my opinion, ARK Invest are unquestionably the most credible folks on Wall Street, the most credible people talking about Tesla, period. And now I'd love to hear from you guys in the comments below. Let me know when you think Tesla stock price is going to reach ARK's target of $1,400 per share, aka $7,000 a share before the stock split. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.